Hello, you're watching Deal Flow, CNBC Africa's African M&A show. Each week we offer you insights from the deal makers and the CEOs, the financiers and the advisors. I'm Erica van der Merwe. Hotel and gaming group Sun International has announced a 664 million rand deal with Thai-based group Minor International. The deal gives Minor International, referred to as Mint, deeper access to African hotel assets. We're discussing this with Callan Willamson, analyst at Efficient Select. He's in our Cape Town studios. And here in Johannesburg, Viv Govender, senior analyst at Vunani Private Clients. Welcome. Good to have you guys here. Viv, if I start with you, this deal announced by Sun International as a partnership with Mint, sort of a sharing, sort of a co-working together with the African assets, with Sun International focusing more on the casino side. How do you see this deal?
Yes, you're quite correct. Look, they aren't exactly leaving Africa because, I mean, obviously Africa is still a very attractive place to be in, but they're focusing more, they think, in terms of the gaming aspect of the African properties, giving over the hotel and the hospitality part over to Mint, which they think has a greater capacity to handle that, and taking the money that they save, not just in terms of the deal of the sale price, but also in terms of the money they're saving in not doing refurbishments, etc., that are required, and use that money to focus on expanding their operations in Latin America.
So, Callan, that was one of the elements highlighted by Sun International. They've had many contenders for these African assets, but the appeal of Mint, amongst other things, is the balance sheet, so the capacity to help with the refurbishment and the development of these hotel assets. Is that how you see it?
Well, exactly, Erica. We think, given that this deal means that Sun International doesn't have to, fork out as much capital as they would have had they not done the deal. That is a very important element for Sun International at the moment, and Mint's balance sheet, certainly they're happy to fork out that capital, given that they help hotel operators and given that they want exposure to Africa, and there's no better way for them to do it than to acquire a hotel. It's certainly a lot quicker, and it's certainly a lot more capital or less capital intensive than going out and building it themselves. So certainly the partnership with Mint is an attractive one for both parties.
Well, we asked the CEO of Sun International, that's Graham Stevens, about the thinking behind this deal.
It's a really good and natural partnership. We've worked on it for over a year now. For some time, we've questioned whether our core business of gaming is that well suited to Africa, and we've stopped actively pursuing opportunities there. At the same time, our brand attracts a lot of opportunities, but predominantly hotel. So Mint are looking for hotel opportunities. We would be very happy to partner with them in opportunities that give a combination of hotel and casino. And we're not just investing, we're bringing them in as a partner where they'll focus on the hotel side. We stay focused on the casino.
So, Viv, what we're also hearing here, so it's a partnership to help them, support them with growth of their assets, but also enabling them, providing Sun International with a platform for further expansion in emerging markets.
Yeah, more specifically Latin America, as you mentioned. Look, they went to Chile, Colombia, also Panama as well. They've basically acquired virtually all of the Monticello operation. I think it's 98.9%, which is effectively 100%, They are looking to expand in Colombia and Panama. They did highlight the fact that they've really turned around the Chilean operations. It was hurt a bit because of a smoking ban, but they've been quite smart about it, building smoking terraces, etc. And they also think that some of the operations happening, for instance, in Chile, benefits them because they're dealing with the same kind of regulatory structure that they do in South Africa, where you have effectively a license giving you exclusivity to a certain area. It's a little different in some other places they're going to, for instance, Panama. There's not as much exclusivity and there's more competition coming through. But let us not forget, they also mentioned in the statement that they are also looking at Mint, not just because of their balance sheet, etc., but also because they have contacts in Asia, and for possible expansion going forward, they might look at a similar partnership as they have in Africa, in Asia, with Mint taking over of the hospitality and them looking at gaming licensing. So,
Callan, standing back, looking at what we've seen, the restructuring at Sun International, that's been some time in the coming, with some retrenchments announced more recently. So, a real focus on cost cutting. So, it's cost cutting, but also focusing on the top line, revenue growth, and regional expansion. What is your view, just assessing this? Will it be successful?
Well, you're exactly right, Erica. I think since Graham and the new management team were put in place in 2013, you've seen a clear paradigm shift in what they want to achieve. They want to leverage off their current portfolio of properties in South Africa, and that means getting better returns off the capital that they've got in their current portfolio. I mean, they've got a great set of assets in South Africa. It's just about cross-selling and re-synergizing those assets and getting a better return. But also more importantly, it's about being operationally focused and focused on costs and improving margins, while at the same time looking elsewhere for growth regions, whereas South Africa, you can argue, is a mature market from a casino revenue point of view. So in South Africa, they're more targeting the margin, and then they're looking at areas like Latin America and potentially Asia to target the growth.
So let's look at those two elements, Viv. So looking at the South African market, the capacity, the ability to improve margins. So cost cutting can only go up to a certain point. To what scope is there to grow the top line in an economy that's tough, disposable income under pressure?
Let us not ignore the fact. I mean, I know, for instance, these casino operators in Las Vegas, their operations in Macau are often larger than the operations in Las Vegas. So there is a lot of money to be made there, and it doesn't make sense for, even though it's a South African-based business, to stay in an economy like South Africa's, 50 million people growing at below 2% a year, when there's billions out there growing at, in excess of 4 or 5% a year.
Yeah. But more then on this point, Latin America, the appeal for Sun International in these regions where growth is in excess of 4, 5, 6, 10% even in some areas in which they're operating.
I'd caution Asia as our growth story. Asia is a market we'd love to be in. It's hard to get into. Our more immediate and realistic growth story is in Latin America, where we've been pursuing opportunities for some time. We've got a big property in Chile. We're buying more of that. We announced that a month or two back. We have a property opening in Panama after some construction and fit out. That'll open a couple of weeks from now. We got licensed in Colombia a couple of weeks ago with a property that we're going to develop and open sometime in 2015. So our immediate and real growth story is more Latin America. We've dwelt on Asia because of the mid-story. Asia for me would be a wonderful to have, but much harder to get into.
So Callan, clearly Latin America is the opportunity, high growth. It's a fresh new market for a new casino and hotel operator to enter. But of course, new markets, new fields bring risks. So new regulatory environments, as Viv said, some are similar to South Africa, some are completely different. Risks potentially for error, perhaps wrong assessments of the market. There's been, for instance, a recent smoking ban introduced, I think it was in Chile. So just adapting to that and adapting the business model to that.
Well, you're exactly right, and this is the thing with these, with expansion, it always comes with risk, and to the extent that they are successful in Latin America will define this current management's regime. So at this stage there's early signs that they want to do the right thing, they want to maximize return for their capital invested, which obviously is a critical element for us as shareholders to create value. But on early accounts it looks like they're doing the right thing. I guess the proof will be in the pudding in time when we see the results.
Would it be out of place to expect a South African operator to expand in developed markets? Viv, are these markets, Europe, US, they're just too unfamiliar, too many long established operators there?
If you look at some of the other sectors in the economy, for instance, look at the retail sector, you look at the insurance sector, you find that those of us that have gone up, those companies, South African companies that have gone into those markets have generally not done very well. The real champions have been things like MTN that have gone into places like Nigeria and Iran. Companies like, for instance, Checkers that have gone to Africa versus companies like Pick n Pay that eventually went into, Australia. These developed markets, they have a very different regime. They don't play to our advantages. We know how to be flexible. We know how to adjust from a management style, South African, to the developing market kind of environment. In the developed market, there's often too much competition, too many established players, and even looking at places like America. Right now, I think Atlantic City, which used to be one of the premier gambling destinations in the world, is actually falling on very hard times, and the changes happening there are also not even benefiting the local operators, let alone newcomers to the market. So I think it's better to expand into places in the world where there is growth, where you have opportunities for the first time, as opposed to places where there's current operators fighting over maybe sometimes even a declining pie.
Yes. And Callan, just to get some perspective on the Africa element of this deal, because some of the media reports on this deal was headlined that Sun International is reducing its exposure to African markets. Is that how you're seeing it, or is it just that it's bolstering its presence with a bigger balance sheet?
Well, clearly, if you look at the numbers, it's, these hotels, they spread across 5 different countries in Africa. It makes approximately 7% of the revenue, about 3.2% of EBITDA. So you've got to ask yourself, across all, allocating all that time, all that capex, is the juice really worth the squeeze? And clearly, given that there's a constraint on the amount of capex Sun has available to them, they think they would rather, instead of spending the capex in Africa, where the returns haven't been that great, that they would rather do it in the next best alternative. And clearly, Latin America is that. So you can clearly see that they, removing their focus out of Africa and into higher growth regions.
Viv, closing off, looking again at the local market, the South African market, I should say. What's the competition like in this market for Sun International? How big are the competitors, and who's the biggest player in the South African casino market?
Look, the market is under pressure, as you mentioned before. I mean, the benefits to a certain extent from places like Tail Bay with regards to the weaker currency bringing in international visitors. But if you're looking at the local consumer, I do think that going forward, unless we see a strong recovery in our economy, basically, we aren't going to see too much, really shoot the lights out growth happening in South Africa. So I think it's basically a case of, like you mentioned earlier, trying to expand your margins, trying to basically reduce your costs, see what you can do with regards to revenue, maybe bring international guys in terms of, international visitors taking benefit of the weaker currency. But if you are looking for growth for this company, it's probably going to be international, and it's probably going to be, like I said, in the developing markets.
And interestingly, Graham Stevens says their flagship property, Sun City, I think for long neglected, they've been refurbishing that. Let's look at what he said.
Over the past year and the next probably 3 years, I think you'll see some nice changes at Sun City as we try and refresh it, make it a bit more relevant, address some of the concerns guests have raised. The Cabanas is getting a much needed refurb over the next 2 years. It's a very popular hotel, but it's been in dire need of refurbishment for a couple of years now, and that's going to happen.
Callan, so standing back, so if we looked at the investment implications of this deal and what it tells us about the strategic thinking and rethinking at Sun International, how would you rate or assess this stock?
We've got a positive view on the stock, and we think the attention to detail in terms of focusing on maximising return on capex is a critical element of creating shareholder value. We think there's quite a lot of low-hanging fruits within the South African market, so yes, top-line growth isn't going to shoot the lights out, but there's certainly some cost controls and efficiencies they can bring in which will improve margins, and then to the extent of the success of their offshore expansion will obviously determine the growth. However, we think the current management team, there are some low-hanging fruits, as I said, and it does bode well for Sun International on today's information.
Viv, so that's a rather hopeful assessment from Callan. Thanks, Callan. What's your view on Sun International?
Yeah, look, I mean, I'm also pretty hopeful, but I mean, I'm also a bit worried about some of the Latin American expansion. I mean, the biggest economy in Latin America, Brazil, has come down significantly from its, recent growth rates. I mean, we look at it as being one of the, expanding economies. Recently, it's been, mirroring South Africa as opposed to mirroring places like China, which is obviously a negative in terms of growth rate. And there is some dangers happening in Latin America. Argentina is going through a bit of a crisis at the moment. Venezuela has been in trouble. Obviously, not in the countries that we're talking about, but I mean, even in places like, for instance, Chile, and in terms of places like Colombia, they are obviously affected by the regional economy. And I think if you do see, for instance, something happening with the commodities super cycle, prices coming down, and the economic growth there kind of come down a bit, it might be a danger for the company. But overall, I do think it's positive.
Well, that's it from Deal Flow this week. Thanks to my guest, Callan Willamson, analyst at Efficient Select. He's in our Cape Town studios. And here in Johannesburg, Viv Govender, senior analyst at Vunani Private Clients. From me, Erica van der Merwe, it's goodbye.